Hi, this is Michael Waits, and welcome back to This Month Amplified. I love doing these. David Gritz, a co-founder and managing director of InsurTech New York, is with us as always. David, we missed a month. I missed this conversation with you. I'm glad to have you back. How are you doing, by the way?
I'm doing great. And I guess one exciting thing is when you have a call with someone and they're like, "Are you guys still doing it? You missed a month." So I'm glad to be back and hopefully talking about the topics that matter.
I love it. We're always talking about the topics that matter. Let's jump right into this thing. Hurricane Milton. And what was the one before Hurricane Helene? Did I get that name right? I feel kind of disconnected because I'm not in Florida. But I'll tell you this, my sister's in Florida, and I'm super concerned about what's happening there. Maybe you can run me through some of this stuff and why you think this is so significant.
Sure. So Hurricane Helene was the last one. Both of them hit areas that haven't really uh, gotten much hurricane exposure. So Hurricane Helene hit in Florida in the Big Bend region. So if you think about Florida as a peninsula, the Big
Yep.
Bend is essentially the upper left quadrant. And
The Panhandle.
exactly. And
Yeah.
it wasn't really the part that hit Florida that made a big deal. It's that it continued into North Carolina and actually
Yeah.
impacted not just, coastal regions, but a mountainous region of Asheville, North Carolina, which it's kind of a weird thing to think about. Wow, a hurricane's coming into the mountains, but that's where a lot of the devastation happened because many of the homes are remote in forested areas, not easy to get to. And I think it was less than 1 in 20 homes had flood insurance because, if you're on the side of a mountain, it doesn't completely occur to you to have flood insurance. So, not a lot of people were thinking about the overall risks of what could happen to them. And, it could be, 5 to 10 years for that area to fully recover. And then in terms of the second one, Milton. So Milton was the first time that essentially Tampa had nearly a direct hit. It wasn't a direct hit; it was about 70 miles south um, in almost 100 years. And since then, millions more people have moved to the area. It's substantially built up, and not a lot of people know, but that area sits on a continental shelf, so the water is really shallow, and
Yeah.
that makes it easier and more susceptible to flooding. So, the storm surge was pretty substantial there. And I think a lot of people don't realize even a 3 foot storm surge is enough to carry cars and, of course, people away. So, the people that didn't leave their homes obviously were not really in good position with the storm coming through. So, I think both of these storms are really devastating, and especially since they're back to back. And, obviously, I hope all the homeowners are able to recover. But I think the challenge is a lot of people don't understand, they buy home insurance and hope that they're covered for everything. But at the end of the
Yeah.
day, like very few people read their policies to know, ultimately the wind side is usually covered, but the flood is not. And you need to have separate flood insurance. And a lot of times there's even carve outs for the wind side of it, especially if you don't keep your roof maintained or meet all of the code requirements that are essentially mandated by your insurance or your township. So those are some of the problems. But I think the biggest problem to all of this is really the question about, you know, is a homeowner in Florida insurable, right? Because hurricanes
We
will
talked about this a
happen.
few months ago. Sorry, go ahead. Yeah, keep going.
Yeah, will happen. And, since we talked a few months ago, I've done, additional research on some of the problems. And
Tell
one
me.
of the data points I found from the Insurance Institute, III, is that they took data from the Florida Office of Insurance Regulation in 2022, so a couple years ago. And over the last 10 years, there was $51 billion of claims paid, but 71% of it went to attorneys' fees and public adjusters. And that's
Oh
something
no.
that's like, really concerning because ultimately it means that the homeowners aren't even getting the money to fix their properties. But recently we've been trying to actually do something about it. So we've been looking into startups in this space, and there's actually 4 startups that are in this space that are trying to solve the problem to allow homeowners to be their own advocate and not rely on public adjusters or attorneys in order to get their claims. So on the auto side, there's a company that's starting up. The founder's based in DC. He's a litigation attorney on the auto side named Jonathan, and he's building a platform to help people if they've been in an auto accident to essentially know what to say to an adjuster to help them get to a resolution, opposed to having to sue their insurance company. There's another company called ClaimBright, which is founded by a guy named Dylan who had run a MGA in the trucking space before, and they're also on the auto side. And then on the homeowner side, there's a couple companies. There's one called Tugboat, which is based in California. Both of the founders are public adjusters, and they're interested in figuring out how, for $250, they can help the individual be an advocate for their own claims without having to hire a public adjuster. And similarly, there's a company called Claim Partner, which is based in Czech Republic. The founders moving to the New York area to set up U.S. operations, and they've successfully done it in Europe. And now they're trying to figure out how to do it in the U.S. to essentially, advocate for homeowners and allow them to have the right tools and language to communicate with the insurance adjusters directly.
So there are a bunch of issues that are raised there. Does WUI also fall into this category as well? I think they're based in California too. We had them on the show before, and they were talking about, they build software for climate adapted communities, right? Trying to help people understand like what their risks are and trying to make their homes more resilient, which seems to fall into place here. Are these companies that are building the stuff that you're talking about, are they using artificial intelligence to help people become their own advocates, right? So they can know a bunch of things, like one, what's really in their policy, and two, how to talk to the insurance companies and the adjusters so that they can get the claims that they need. Does that make sense?
Yeah, so let me break that out into 3 parts. First, are they using
Okay.
AI? How is it working? And is Wooly one of those companies? So first, are they using AI? Absolutely. AI is a really good tool to help read through relatively complex policy language. For those of you that have, a number of insurance policies, one, I recommend that you read them, but even if you don't, you should understand what's in them, and your agent can be a good
Yeah.
advocate for that. But most of them are 30 or 40-page documents, which what always perplexes me is you get the policy after you buy it, not before.
Right. Right.
There was only one time that I actually had the opportunity to buy a product after I read through the policies, and that was when I got extended warranty for my car. I bought it through Chase, which is one of our portfolio companies, and essentially they had all the policies or the warranty contracts listed on their website. So I read through 3 or 4 of them. I saw which one I liked best, and then I made my decision. And if I had that ability on my homeowners, I'd feel probably a little more confident on the coverage that I
Yeah.
have. But I generally take a look at the policies afterwards. Do I say I read it word for word? Some of them I have, some of them I haven't. But what's the benefit is if you have a tool like Claim Partner or Tugboat, they allow you to submit your policy, submit what claim you think you have, and they'll make an assessment of whether they think you have a claim or not. And what a lot of policyholders don't realize is the first notice of loss process is very important. What you say and how you say when you submit the claim could mean the difference between denial and an almost impossible process to get any coverage versus
Really?
an approval right away, and payments within a couple weeks. And unfortunately, I have had the experience on both sides where I've submitted a claim and it was rejected, and I went through all the way to almost going to trial to get a payment, versus other times I submitted it quote unquote properly, and the adjuster came out, we got quotes from contractors and they paid, exactly what it was. I mean, obviously I had my deductible, but it was the coverage that I expected for the policy that I had. And um the problem is like, every carrier's process is different for claims. Every situation is unique for a claim. I mean, they definitely fit into clusters, but if you don't make it easy, simple, and communicate in the proper way to your insurer, there's a good chance you're not going to get the outcome that you like. And supposedly, this is why public adjusters are in the fray to be advocates for you. But I've also seen the challenges that, an insurer sees a public adjuster submitting, then all their defenses get up because they know it's going to be a battle, and that public
Right.
justice to prove their worth. So it's always better if the actual policyholder can be involved. Like, there's no reason to add additional, as I would put it, grift in the middle of the public
Right.
adjusters and the attorneys, taking it away from the two parties that are part of the contract, right? Like, there's the
Yeah.
policyholder and the insurer, and those really should be the only ones that are involved in the transaction in a perfect world.
I want to ask you a technical and kind of customer experience question, if you don't mind. On one of my other shows, I recorded with this guy named Igor Hoffman, and he's the head of sales for a company that's called DID. And this is an Israeli company, right, that does AI generated avatar videos. And what they're doing a lot of different things, but one of the things they're doing is trying to have their avatars sit on top of like these large language models that, again, could go through your insurance policy, could go through your home ownership, like all this kind of stuff. But it feels like you're speaking to a person, and they're super like hyper realistic. I'm curious if you think that would be something you would want to use or you would feel comfortable using in the cases that you were just discussing. Does that make sense?
Yeah. So, I mean, I think it could be helpful, but in the cases that I was mentioning, essentially, the best way to describe what policyholders need is they
Yep.
need essentially like a pre-processing before they, submit what they're going to submit. So almost think of it as like a quality assurance review. And I think the best example for this, in a, parallel space, is the work that a mortgage broker does to get your submission ready for an underwriter. So let's just say you're buying a home like in the US, which usually is relatively simple, but sometimes people's situations are more complex, like if you're a business owner or you have variability in your income, or you have student loans or other types of debt that puts you're not the perfect risk for the bank. And what typically happens is, like, if you go through a process where you go with the bank directly, and the person you're submitting to is also involved in the underwriting chain,
Right.
essentially their goal is to figure out how to reject you, right? But when you switch sides and you have a mortgage broker, their goal is to figure out how do you put together the best package to find the right bank that will accept your application and get you financing for your home. So in the claims situation, what a lot of people are missing is essentially not necessarily someone that will go end to end. That's what a public adjuster does, but someone that will just get the package ready, like, get all the pieces together, just like they would get, like, your W-2s and your tax return and, like, all your current expenses, and demonstrate that, you're going to have the right debt coverage ratio and all of these things. Like, in the same sense, like a adjuster from insurance company needs to see evidence of the damage, the cost of repair, and they need to see that it's assigned to an area that's covered under the policy. And
Right.
if you make it easy for them, they'll make it easy for you. And that's what we're missing in the industry, is a system or process to allow homeowners to submit information in the way that insurers are ready and able to receive it. And I think if that happens, a lot of friction comes out of the system. And my hope is, some of these companies, like the ones I mentioned, have the ability
Yep.
to do that. And, if they do really well, they could change the way that I think insurance claims happen, which is unfortunate because the insurers should be the ones creating this user experience opposed to a free for all. I mean, if you think about it, when you buy an insurance policy, you're not sent a packet that says, if you ever have a claim, here's how first notice of loss works. You just have a claim, and then you're like, wait, what do I do? Do I call
Now
my
what do I do?
agent? Do I call
Right.
the insurer? Is call the right thing? Do I submit it on their website? What the heck do I do? You should know this from day one of onboarding with the policy, not from like, day 753 when you're on the second year of the policy and you're in the
Right.
middle of, some shitty
And something
situation in
bad
your life
happens.
that caused the claim. And for
It's a really
most,
good point.
policyholders, a claim is the first claim of their life. Like, they're not a
Yeah,
professional,
yeah, yeah.
risk manager at a corporation.
No, I've never made an insurance claim in my whole life. Never.
Wow, you're a very fortunate person, Michael. I think
Yeah.
when you're someone like me that's owned a lot of different properties, it's basically actuarially a fact of life that you're going to have.
Impossible. Yeah.
Yeah, I
Right.
mean, sure, if you're a single homeowner, it's probably you're not going to have something. But I think when tenants get into the mix, and that's a lot of different buildings, over different areas of
Yeah.
land, it's eventually going to happen.
Your life is way more complicated than mine. I've only ever owned one piece of property in my whole life. I don't own a car. And I only just got health insurance like 2 years ago. And before that, I just never made a claim. So it's weird. I hadn't even thought about it actually before I just said it. But yeah, I've never made a claim. Um, let's switch gears a little bit. I feel like in my lifetime, the world's been really safe. And I've kind of been insulated from even like, larger skirmishes, but even like some wars that have been going on, right? I was too young to miss, and I missed the Vietnam War. And the other wars that have kind of taken place just didn't involve me at all. And I've been in Asia for 34 years now, right? So, and I've never been drafted or any of that kind of stuff. But there are two big kind of conflicts going on right now, two big ones, yeah? One in the Middle East between Israel and Palestine. I don't know what you say, Gaza, yeah, and then the other one between Russia and Ukraine. Russia's a big oil and energy producer. The Middle East obviously is a big oil producer as well, but the U.S. is like the largest producer of energy and oil in the world right now. And a lot of that's due to the fracking that's taking place in, I guess, places like Minnesota and Pennsylvania. I don't know, but tell me, because you were talking about this, that like there's all this war going on and oil prices kind of haven't moved. So what is that all about?
So I want to take you back for a moment to 2006. So
Okay.
one of the previous conflicts in the Middle East was between Lebanon and Israel. It didn't last a very long period of time; it's about a couple months. And essentially, that along with some other turmoil in the Middle East brought WTI crude prices from $64, early 2006 to, late
Yep.
2007, early 2008 to $135. So,
Oh my.
nearly doubling. And, a lot of people say this oil shock was one of the causes that precipitated or accelerated the, 2007, 2008 financial crisis. And even though that was considered a housing crisis, when people have to choose between making a mortgage payment and paying for gas to get to work,
Yeah.
it definitely exacerbates things. So I think what's interesting to me is since the conflict in Gaza and Lebanon now, which you can kind of call like twin conflicts because they're definitely related, oil prices have been roughly stable, right? Maybe peaked
Yeah.
around 80. It's about 74 now, talking about WTI. And,
Yep.
it's gone down as low as 70. And I think what's amazing to that is like you have very parallel, if not worse situations because you have, the oil resources from Russia dislocated at the same time. But meanwhile, like you don't really have that pressure. And you even have OPEC decreasing supply. So it really begs the question, like, are we in a different world right now in terms of how our energy flow works? Or is there some undercurrent of price change that could happen at any moment, but it hasn't exploded yet. And I'm probably more apt to say we're in a different world, as you said, Michael. I mean, fracking in the
Completely.
US has changed almost everything. So, you know, whether it's in the Dakotas, Pennsylvania, Texas, the US is now the largest producer of not just oil, but natural gas. There's been a lot of new discoveries of places to get oil. And the other thing is like demand for oil globally has been going down. Like the Chinese economy is pretty weak, so their demand has been going down. They've been investing a tremendous amount in solar panels. And actually, I read yesterday that in the UK, wind, I think, is now one of the largest energy categories in the UK. And the most notable thing that happened is they shut down this week the last coal plant in the UK.
Did they really?
Yeah.
Wow.
So, at the point where the UK is becoming, wind focused, where a lot of, you know, Nordic countries, or, look at Iceland that uses hydropower or geothermal, there's a lot of solutions coming into play. And I think one of the things that, Elon Musk said is, the power of solar is kind of creeping up on us. And, it doesn't even take, the full state of Arizona in terms of land mass of solar panels to power the whole US.
Yeah, I
So,
mean, 20% of US energy is already renewable right now, plus all the
it,
oil that's slushing in the world. I don't think prices are going to go higher, but I'm not predicting anything. Sorry, go ahead.
yeah. So, but I think what that means globally that a lot of people are not thinking about, because we were talking about a little bit before the show, like why is the war in Lebanon and Gaza not, continue to be front page news? And I think at the end of the day, for Americans, it like doesn't affect their pocketbook in the way that it did,
Yeah.
15, 17 years ago. And because of that, I think ultimately the Middle East, in terms of their impact, significance, importance, energy of focus on the world stage, is waning, or is going to be in its twilight, because the world is not dependent on their resources. I think we're going to be shifting to a world where we're thinking about where do we get our next lithium, cobalt, and other rare earth magnet metals from. And that's why it was such a big deal in Utah when they discovered like all of this lithium that's available.
And David, I'll tell you this: I was on a recording that I did for the India Game Changer, another show that I have, talking to a guy whose team is building rare earth metal free engines, batteries, and energy and stuff like that. Because this, like, I don't know how much you know about rare earth metals. I didn't know that much either. But the reason why they're called rare earth is not because they're rare. There are tons of them in the world, but because getting the part of them that's useful also takes a ton of energy. It's dirty, right? So it's bad for the environment. And the percentage that you can actually use of the stuff that you find is really low, right? So it's super inefficient. And his team is out there trying to develop all this stuff. But I do think you're right. I think the energy that the earth is using, or that the humans are using on the earth right now, I think the whole tenor of it's changing. And I don't think that the amount of petroleum that we consume is going to go higher. And it's funny because in the context of this conversation we're having probably a decade ago about peak oil, it doesn't even seem to matter anymore. No, does it?
No, and going back to that coal discussion, what was interesting that I was learning about is there's a new energy source that can tap old coal plants, which is geothermal via fracking, which is they use fracking to get deeper into the earth. So, basically the deeper you go, the warmer it is. So you
Right.
can get, super heated, super compressed water that can produce, the same type of energy from a coal plant, except there's no coal consumed. You're literally just making a hole in the ground. So
I
as
love it. I
that
love it.
advances, quote unquote coal infrastructure might replace a lot of other things, because all you need is the energy to get to the heat, the you know in the core of the earth. I mean, obviously you're not even getting to the molten part. You're just going down where it's warm enough.
I love it. Look, I have said for so many years now that like I think that everything that we need to survive is already on the planet. We just have to figure out a way to find it. And I love again I told this guy that I was talking to you about this rare earth metal free engine stuff that he's building. They're like, I just love talking about science because I think it's so cool. And this dude was like one of the smartest guys I've ever met. Anyway, I can't wait to publish that. But I do think you're right. This energy stuff is going to change. Okay, let's talk about um, the InsurTech New York MGA lab and some of the interesting stuff that's going on there.
Sure. So maybe a little bit of context for listeners that may not
Please.
be familiar with our lab. So, you know, basically about 2.5 years ago, we proclaimed or started the MGA lab, but proclaimed that, MGAs matter. And for those who are not familiar, MGAs basically fit in the middle of a spectrum. So on one side of the spectrum is agents that are responsible for selling insurance policies, and then the other side
Mm-hmm.
is insurance carriers that have a balance sheet and their sole goal is to make that balance sheet productive. So MGAs essentially are responsible for three roles that every insurance carrier has to have, except one is optional, right? So every insurance carrier has to distribute a product, underwrite a product, and have risk capacity for that product. So essentially what insurers can do is they can partner with MGAs or managing general agents, and they give
Yep.
them distribution responsibility, underwriting responsibility, and various versions of risk capacity. So MGAs either can take some risk themselves or take none of it and give it all to the carrier. So it's a really great way for carriers to distribute products, and it's a really great way for startups to launch new products because they don't have to actually, wait 5 years of seasoning requirements to start a carrier. So we've seen a lot of innovation. Roughly between 8 and 10% of all US premium is floated through MGAs. And there's been a ton of new products. So what's crazy is there are roughly about 220 startup MGAs in the US. And of total MGAs, there's only about 1,000. So 20% of them are all, new in the last 10 to 15 years. And we realized, starting MGA is not easy. It's a very complicated process. You have to understand your market. You have to come up with an actuarial and underwriting model. You need to find a reinsurer to back you, and then you need to find distribution. And those are completely different skills than the skills that you get in Stanford Business School. So there's very few, Stanford business students or Berkeley undergrads, and I picked Berkeley because they have the most amount of entrepreneurs of any school. I don't know if you knew that, but they're not going to magically wake up and say, oh, I'm going to start an MGA. Of the startups we know of, there's only one that we know of that's a founder that dropped out of college, or founders that dropped out of college to start their MGA, and they actually happened to be in a previous year of the lab. So we realized we had to build a different program that was designed only for MGAs to help them go through all the steps to be successful. So each year we have anywhere between 8 and 14 companies. Year one, we had 8 companies. Year two, we had 11. And then this year we have 13 across all different areas. So just to give you some highlights, and maybe you can quiz me on some of them. But we have a company that focuses in the multifamily real estate space. They help building owners that are concerned that their tenants will change jobs and then try and break their lease. So it's literally called release, and they give options for people to have less than a 12-month lease. They pay an additional fee, and it takes that risk off the balance sheet for building owners and property managers, and they actually help release the units, hence the name. Then we were talking about energy, right? So Edge Creek Power. So they have a product called Sunnerum Labs. And essentially, the idea is like if you read your homeowner's policy and it doesn't cover solar panels you just put on your house, you're probably like, uh-oh. Well, Sunnerum Labs has a product that covers, the chance of your solar panels getting damaged in a hailstorm or a windstorm. They also do it for small businesses. We have a parametric flood company called Rick Platform. So, given what's going on, if you
Yeah.
had some flood damage, they would cover that. We have Wooey, who's in the program now, which you mentioned. So
Yep.
they are
Good.
focused on creating homeowners product for wildfire. We have RiskQ, which is a cyber product. We have a company called ZenHedge, which helps the middle mile of distribution and logistics, especially for perishable items. So let's just say you have, cartons full of bananas, and you are the restaurant store, and you need to get it out to your restaurants or your grocery stores. But the truck doesn't show up. Now what? You got to find another truck. So ZenHedge covers the risk that the first truck doesn't show up. We have a company focused on childhood disabilities called Shareb, and another one that does travel insurance called Satata. So those are some of the highlights, but you can see across all different lines of business, products that are relatively new or very limited in the market today. And we're working with them all the steps along the way on their underwriting, actuarial model, language on their policies, helping them get reinsurance, and then finding distribution channels for them.
Are, like, what were the first two cohorts like? You said there was 8 in the first one, 11 in the second one. Like, how successful was the experience for the people that went through the MGA lab now that they've been out for a year or 2 years?
Yeah, so roughly about 50% of them have gone to launch their products. So keep in mind, not all of them were pure insurtechs in a sense that all they sell is insurance. Some of them were software companies and had, other products as well. So, roughly half of them have gone on to launch and are in the market. For example, a company called For Sure, they were a startup pet insurer. What they kind of innovated on is one of the biggest problems for pet owners is you go to the vet and now the vet's like, okay, pay up, and then you have to submit to actually get reimbursed later on. So that kind of defeats the purpose if you're a broke millennial and you don't have $700 to help your pet's surgery. So they actually provision the payment to the vet at the point of care, so you don't have to worry about that. Other notables that are in the market is Jove. They offer a policy for freelancers. So let's just say you're a freelancer, but you decide that you only work 9 months of the year. The other 3 months of the year, you like to play in Bali and hang out in the sun. They have the ability to turn off your policy while you're not working. Um, Loss pay is one of my favorite ones from last year. So, the team's predominantly in Tokyo and then also in California. And basically, if you ever thought about buying yourself a Maserati, Lamborghini, Porsche 911, you probably wonder, like, if I ever got in a wreck, am I still like good? But talking about policy wording, policies cover the damage, but they don't cover the lost value. And now your Carfax report is dinged. So, if you have a $250,000 Lamborghini, now that you got in a wreck, it's now, no matter how well it was fixed, only worth 190,000. So that gap in value is covered by
Right.
lost pay.
Got it.
Another one
Got it.
that was really exciting was Green Shield Risk. So they started out as a wholesale broker focused on wildfire exposed areas. So similar to Wooey, but they were able to get capacity for their product to launch. We had a company in one of my favorite areas, aviation. So for pilots that own their own planes, typically the insurance covers if you have a professional like pilot that flies every day. But if you've gone through to aviation school and you know how to fly, you would probably like to fly your own plane. So it's difficult to get covered for that. And that's actually what they did. They have telematics so they can see how good you are as a pilot. They can actually underwrite coverage for you.
Do you fly?
I don't, but it's something that's on a later bucket list. Maybe, when my son's a
Good.
bit older.
Good. I like it. I'd love to see you have your own plane. That would make me happy. Okay, I'm going to let you go. This is, as always, super interesting. And clearly people are interested in the stuff that we're talking about. That's why they ask you, like, why didn't we do it last month, the previous month? Let's keep it going, David. I really appreciate it. David Gritz, a co-founder and managing director of InsurTech New York. Awesome as always. Thank you again.
Thanks, Michael.